And while we're getting ready to get started here, feel free to start putting some questions in the chat box if you have them. While I'm presenting this information, we will be, I'll try to be answering questions that are relevant or that I can answer. At the end of it, if there's, I'll go back through and kind of answer all the questions that come up along the way as well as we get going here. So let's give it another 60 seconds or so and we'll get started here. Darren with the first question. Could you explain the safe harbor provisions of employee compensation and PPP forgiveness? Definitely, that will be answered, Darren. Don't you worry about that. That's a big part of this conversation. Brittany, can you include wages for owner employees in the loan forgiveness calculation? You sure can. Now there is a limit on the amount you can do, so TBD on that as well. But good question. I will definitely be answering that. All right, I'm gonna get started here. Let's share my screen, or actually, I guess we'll just get started officially here. Before I share my screen, I'll just say, really appreciate everybody joining the webinar on PPP loan forgiveness. Ever since the PPP loan has came out what, about probably 6-8 weeks ago, from the CARES Act, there's been a ton of questions in the application process, who can get funding, how, with the amount of funding that exists. In the last several weeks, we've been sitting pretty quietly in terms of responding on specific questions or the loan forgiveness portion, because the SBA hasn't really delivered a ton of guidance around that. Well, that completely changed this past weekend when they basically published their loan forgiveness application. It's 11 pages. As an accountant myself, it is very wordy, verbose. It's kind of I'm not a big fan of the form and worksheet, to be frank, because it's very confusing. So for those of you and clients of ours or anybody that's joining, good luck trying to fill it out. I definitely would advise on asking for help as you go through the application process. So with that being said, we're going to basically walk through some specifics on the loan application, and I'm really just going to highlight items related to forgiveness reductions, specific things that have changed that along the way, and as we go through, we'll be answering any questions. So hopefully you all enjoy this. So let's get started right now. And let me know if you guys can all see the screen and the PowerPoint. So let's get rolling here. All right, so the SBA released the loan forgiveness application, as I had said earlier this week, and we'll walk through at the end some little things. But on my screen right now, you should be able to see the actual application itself. And again, it's published on the SBA website itself. So going back to the spreadsheet, or excuse me, the PowerPoint. Let me go back. So a couple of highlights that have come up along the way. And these highlights are kind of some changes or really key relevant information. One, the covered period. What the covered period is the 8 weeks or 56 days from the funding date you received it. So the date that the money hit your account plus 56 days. So that's 8 weeks. That is the covered period. You'll hear me reference that a lot along this way. Well, guess what though? They are allowing you to select an alternative payroll covered period if your payroll periods don't purely align with those 56 days. Basically what that allows you to do is to select the first day of the first pay period following the PPP loan disbursement date. So what that means is, let's say you receive the loan on May 1st, and the way that the 8 weeks works along the way maybe don't align properly with the funding or the forgiveness that you're gonna have, possibly. So let's say that your the next payroll period, the first day of the next pay period is May 5th. Well, for payroll expense purposes, you could use May 5th plus 56 days for that period. So that alternative payroll covered period only includes payroll related expenses. It does not include your mortgage interest, your rent, your non-payroll forgiveness expenses. But you do, in short here, you're able to select an alternative payroll covered period that could start after the actual funding date that didn't exist before. Number two, the $2 million safe harbor. A lot of people were worried about the whole good faith certification checkbox that you selected when you received the loan that basically was like, hey, you are making good faith certification that your business needs this loan in this time of economic uncertainty. Well, it would be very hard to kind of confirm that to make sure that you actually needed the loan, depending upon how your business did. So the SBA came out like a week or two ago and said, if you're below $2 million, the actual loan that you received below $2 million, then you are deemed to have checked that box in good faith. So they won't audit you against that checkbox. They still may audit you in terms of confirming that the documentation exists, the payroll was calculated properly, and all the other items that are, but they won't audit you against that. If you're over $2 million of the loan, though, you are going to be in the queue and you possibly will get audited as that goes throughout the way. Moving on is, and I see a lot of questions rolling in. And again, I'll get going back into that. More clarity on the full-time equivalent and salary hourly wage forgiveness reduction. That's a huge part of this PowerPoint. We'll be getting into that very soon. More guidance on the amount of owner wages that are allowed for forgiveness. Well, what's interesting here is, number one, in terms of the amount of owners' wages or the types of owners' wages that can be allowed for forgiveness, you have S-Corp owners who receive a W-2 wage plus distributions. You have a partnership owner operators who receive guaranteed payments and draws. You have Schedule C people who receive draws, etc. So the types of wages that owners get of businesses vary. Now, there's actual guidance and a cap of the amount that the owners can be paid during that 8-week covered period that can be allowed for forgiveness. More information to come on that. The EIDL advance, which is the up to $10,000 advance on the EIDL loan that many of you received. If you apply for the EIDL loan, that actually reduces loan forgiveness. What that means is if you got a PPP loan of $100,000, you got an EIDL advance of $8,000, you can only get $92,000 of your PPP forgiven. You'll still end up at 100 with the 92,000 plus 8,000 equals 100,000, but you can't like kind of double dip that $8,000. And a quick note, a lot of our clients the last couple of weeks have actually began to receive the EIDL full loan process. It's still not like the normal SBA loan process. It's much more reduced, but we are seeing people getting up to $150,000 in a 30-year loan at 3.75% with 12-month payment deferrals, FYI. The next thing is that we are still unclear on the tax deduction of forgiven expenses. What that means is that when they provide this guidance, they said the money that you're receiving in the loan will not be taxable. But guess what? Our friends, so the Congress / the stimulus package / the SBA is the one that promoted or pushed this loan out. Well, guess who the other entity is? Our favorite, the IRS, right? Well, they are saying because you receive free money and you're going to get forgiven, then those expenses that are forgiven aren't deductible on your business tax return. Well, then that essentially means that the loan that you're getting is taxable, right? So it's weird in terms of how it is. With that being said, that's the IRS's position. Congress has promoted a bill or pushed a bill, and this is like a week or two ago, that's trying to say no, that shouldn't happen. We said that this is not taxable, so the actual forgiven expenses still should be deducted. So that's still gray and unclear. As of now, the IRS is still saying otherwise on that. But again, we'll see how that goes in the near term. Much more to come on that. And then the last thing is SBA continues to put out FAQs for reference. I have a link here. Literally, they just keep adding, twice a week, new answers to things. I guarantee from this application, there will be a whole new FAQ section as questions come in, as unclarity and as gray areas come up. So the three big points that I take away from this that can greatly reduce your loan forgiveness portion is these items here. Number one is, did you reduce your headcount as a result of COVID? If you reduced your headcount, the amount of loan forgiveness could be reduced by that kind of percentage of reduction. Number two, did you reduce wages paid to any employees greater than 25%? That means if somebody's on salary and or if somebody's hourly. So if somebody's making 90 grand, did you reduce them down to 60 grand? If somebody's making $30 an hour, did you reduce them down to $20 an hour? For those people that were reduced greater than 25%, you could have a loan reduction, forgiveness reduction as part of this. Those first two things I will talk about in detail here. But the first two things is, did that happen in your business? And number three, which is very interesting, is are you planning on including owner's wages / payroll in the forgiveness calculation? So again, the owner's wages, W-2, guaranteed payments if you're a partner, etc., kind of whatever the bank included as part of your loan. If you have included that, and if the owners are still getting paid, you can still include that payroll as part of the forgiveness number. But that amount cannot exceed pay from an 8-week equivalency in 2019. So what they're basically saying there is that if in 2019 you made $75,000 or $50,000 as an owner, you can't then go ahead and pay yourself an equivalency of 100 grand during that 8-week period. You need to use the max you can use is that 8-week equivalent from 2019. Why they're doing that is so owners of businesses aren't just increasing their bonuses and their payroll up to the max in order to get loan forgiveness, which essentially would be free money, right? So that is a complete kind of one out of the park that we never seen or I never expected. But from my perspective, it actually makes sense for minimizing abuse for this, right? The whole goal of a PPP was to keep employees employed, keep your doors open, etc. So again, a very interesting part of that. All right, eligible expenses to be forgiven. Cash compensation during the 56-day covered period or alternative, right? You have the 56-day or the 8 weeks covered period, the alternative covered period. I did see a question that said something like, how long can you wait to start the 56-day period? Again, it depends. It can be, the latest you can start is the first day of your pay period following the funding date. So let's say that the funding date was May 1st and your next pay period starts May 10th, then technically your May 10th can start the alternative covered period. And then that's that. So then cash compensation there during that period. The one thing is the $100,000 max, just one note, is if somebody made over 100K or it's 100K equivalent, the max that you can include for those 8 weeks for that person in the wages is $15,385. And that's calculated by 100,000 divided by 52 weeks in a year times by 8 weeks in the funding period or the covered period. Non-payroll is still rent, utilities, mortgage interest in place before February 15th. If you had a lease that started May 1st or March 1st, it can't be included. If you had new internet starting for April 1st, you can't include it. It needed to be in place as of February 15th. February 15th is a very key number in a lot of this aspect. Here's another interesting one, paid or incurred and paid before next payroll billing date. So they've always said paid and incurred. So you have kind of a cash basis portion as well as an accrual basis portion, right? Well, guess what? The cash basis portion in itself is, the cash basis portion is typically like when the money goes out your bank account, right? Well, what about when I have it incurred? So a couple things here. Number one, if you're using cash basis during the 8 weeks is when money leaves your account, you can include this thing here. It says the payroll date or ACH debit from the bank account. So clearly for a lot of people with payroll, you have like a 2 or 3 or 4 day waiting period when the actual funds move from the business's bank account to the actual employee's bank account, right? And that pay period reflects typically the date the employees get to pay. You can include either of those days as part of it for payroll, right? So the payroll date, which is the pay period ending date really, or not the pay period ending date, is the actual date that the employees receive their paycheck, or the ACH debit from the bank account. Either of those can be included. So again, there's some wiggle room there. Also from an incurred date, you can technically use utilities, rent, and payroll that is incurred during the 8 week period. So it's more on an accrual basis, right? Like, hey, when did my employees earn that payroll over that 8 week period? When did those utilities actually in place? The key thing with that, again, they want you to spend the money. So the key thing is in order to use incurred is you need to make sure that all those items are paid before the next pay period or before the next billing period or billing date of the utility. So as long as, the key there is to make sure it's basically paid soon afterwards. They don't want you to say this is incurred and then literally you don't pay it for 4 months, because then that's essentially going against the whole point of the loan forgiveness aspect here. And then the last thing, 75% of forgiven amount, again, needs to be pay related. And then owner's compensation. Again, this is kind of what I said last time, unable to exceed the 8 week equivalent of 2019 payroll. It's in place to minimize the owners paying themselves more now for forgiveness, right? And I mentioned that. So this is a new thing. A couple things with that is, what if you didn't have payroll in 2019? I don't know the answer to that yet. I'm sure there would be some more clarity on that. Or what if I just didn't take anything out last year and now I'm paying myself a lot? Well, that's kind of part of the rules and part of the timing issues that comes up along the way. So again, in terms of what you can include in owner's compensation, distributions, W-2 wages, etc. That's kind of what your bank is allowing you to do, or what the bank's going to approve and forgive. So work with your banker on some of that specific aspect. All right, moving on. All right, there's a Schedule A that comes along on the form. So there's like a main cover page on the form, and there's Schedule A. Schedule A is like a calculation sheet. The main form of Schedule A is going to be required to be submitted to the bank and then to the SBA. So those two forms will be required. Your bank may require a bunch of other things, but those two things will be required. And we're going to kind of walk through some examples here in a minute. It does include a supporting worksheet that will assist in filling out the form. The worksheet has a couple different tables. There's a table 1 and a table 2. The first table is essentially employees during the cover period paid during the 8-week period that made less than $100,000 in 2019. Those employees are up for the salary/hourly wage reduction. Table 2 is those that were paid during the covered period that made more than $100,000. That's a separate table. The reason is they're not part of the salary hourly wage reduction. The reason they're not part of it is because the IRS or the SBA, and the CARES Act, they don't care if you reduce that person's payroll over the 25%, because they're like, you're making 100 grand, so you're a highly compensated individual. So if you reduce your pay by 50%, they don't care, because they're looking at the people that make less than 100 grand that you're not reducing them. There's a section for employee identifier, which is the last 4 of SSN, and then the self-employed owners of a company, S Corp owners, shareholders, etc., should not be included on either of the table. There's a separate section for that. So if we go to an example here, I'll show you on my screen. Right. Here's the worksheet right here. So if we zoom in a bit, table 1 is right here. Kind of, this is what it looks like. Employee name, employee identifier, the compensation during the 8-week period, the number of FTE, or like, which we'll get into, and the salary hourly wage reduction. There's a line here that is FTE reduction exceptions. I'll get into that. And then it's total payroll, total FTE, total reduction. Table 2 is those that made 100K in 2019. As you'll see, they don't have the reduction thing applicable. And then section 3, I just basically added this for kind of our purposes to support our clients track it, because typically a lot of our clients have multiple partners. And again, you can see that it has nothing to do with the salary hourly wage reduction. All right, a lot of questions coming in. I'm going to keep rolling through, and then we will actually go ahead and go through those at the end. All right, so back at it. All right, so the FTE reduction. So there's 2 big reductions here. The full-time equivalent, which is focused purely on headcount, and then the salary/hourly wage reduction. So what you pay somebody, that's focused on what you're actually paying somebody. So there's 2 separate items, right? The first one we're going to get into is FTE reduction. So what FTE is full-time equivalency. Basically what it means is full-time equivalent is 40-hour work week person, right? So the average number of hours a week divided by 40, and you round to the nearest 10th. If you're a 30-hour week person, then you're 0.75. If you work 45 hours a week, you're still a 1.0, right? You're only a 1 full-time equivalent. So essentially a lot of our salary, a lot of our clients have salary employees who are 40 hours. Many of their clients or their employees would be 1, but any hourly employees or variable kind of work people may be much less than 1. So for each person, typically you're going to have to essentially look at those hours per week and divide it by each person. So it could be, if you have 20 people that are less than 40 hours, it could be kind of a burdensome task. They do offer a simplified method of calculation, which is essentially you're either 1 or you're 0.5. So it may be easier just to use that if you're below 40, right? If you have a handful of people below 40, just use 0.5. But at the same time, what if they're all above 0.5? So you may want to do the calculation analysis to kind of get you to the best result. Your loan forgiveness can be reduced if average weekly number of FTE during the covered period is less than the borrower's chosen reference period. I'm gonna get to that in a minute. So again, this is a big part of it. But you're also possibly exempt from reduction if you have the FTE reduction safe harbor applied. So the first part of this, the last 2 bullets I'll get to in a second, but the first part of this is just understanding what an FTE is, right? The max is 1. You can use a simplified method for a half, right? Number 2 is basically a comparison. So you have to look at the FTE, average FTE during the 8-week period, covered period, or the alternative covered payroll covered period. What is the average FTE at that point, right? So you have to average total FTE during and figure that out. Then you need to compare it against a reference period. The reference period is essentially an election by the borrower, by you, the person that got the money, to choose between one of these two periods. You can either choose between February 15th of 2019 to June 30th of 2019, so from February to June of 2019, basically, or January to February of 2020. So you have two periods you can choose from. You can elect either one. You're going to want to pick the one with the lower FTEs because you want to be above that during the covered period. If you're a seasonal employee or seasonal employer, you can still use the two periods above, or you can select a consecutive 12-week period between May 1st, 2019 to September 15th, 2019. Again, that's if you're a seasonal employer. So basically the method, once you select the reference period, the method that you use to calculate the average headcount during the reference period needs to be the same that you use during the covered period. So if you're using like the simplified method of 1 or 0.5, you have to use that same aspect on this aspect. You can't use, I'm going to be very detailed on this one and then use a simplified period. You need to use the same one each. And then basically what you're doing is taking the covered period versus the reference period. And if the covered period is higher than the reference period from an FTE, then you're fine. There's no loan reduction, a loan forgiveness reduction. If your covered period is lower than your reference period, then there's a possibility that you're going to have a loan or an FTE reduction or a loan forgiveness reduction because of FTE, unless you hit the safe harbor rule. And then safe harbor, and I'm going to go through an example here in a second for people like rolling your eyes and be like, what is going on? The FTE reduction safe harbor. Basically, you're exempt from reduction in loan forgiveness if the following happens. So they're saying if basically, because of COVID-19, from February 15th of this year to April 26th of this year, did you lay off people and got rid of people or reduce their hours, right? If you did it during the time period, and then you restore the original FTE levels by no later than June 30th, so you rehire everybody by June 30th, then basically you're able to say, I hit the safe harbor, I can go ahead and I won't have to have my loan reduced because of FTE. So once again, key dates here. If between February 15th to April 26th, you either laid people off or reduce their hours, and then you go ahead and rehire them all or get your headcount back to the same spot as it was as of 2/15 or February 15th of this year, then you hit the safe harbor and you won't have any kind of reduction due to headcount. Very confusing, but I think it makes sense why they're doing it, especially those restaurants, retail stores, gyms that had to lay a lot of people off. They're saying, well, if you reopen by June 30th, if we can get you people back hired, then you won't get penalized for that aspect. The second big point here is FTE reduction exceptions. So these items do not reduce loan forgiveness. So again, they're good for you, the employer who received the money. If basically you laid off somebody during that period and then you want to rehire them and the employee said, no, I'm good, I want to stay unemployed, I still want to get paid, state unemployment and extra federal employment, I don't want to go back to work with you. The employer can still get credit for them as long as everything is kind of written, say, hey, here's a written offer, the employee rejects it. So make sure you're documented if that happened. And that's happened a lot in restaurants. And then additionally, any employees during the covered period. So again, the covered period, the 8 weeks post-funding. During the covered period, if you fired an employee for cause or they voluntarily resigned, you can still get credit for them. Or if they voluntarily requested and received a reduction in hours, you can still get full credit for them. The key with those three things is basically, if you've hired an employee to fill their position, then you can't double dip. That would still be one employee. But if you never rehired somebody because you're like, I don't know, my business is starting to dwindle down, I don't want to rehire somebody, you can still get credit for the people that you fired for cause or that they voluntarily resigned or voluntarily reduced hours. So let's go through a comparison of what this looks like and what this means. All right. So here's the FTE reduction portion. Let me zoom it in a little bit. All right, so basically, again, as we kind of walk through this, so number one, let's say that you have to look at the two reference periods, or these two, right? February 15th of 2019 to June 30th of 2019, or January 1st, 2020 to February 29th of 2020, right? Let's say during that period, you had 20 average FTE during that period of 2019, and then you in January, February 2020, you got 15. Just ignore this line, this is a seasonal. So the reference period you'd want to use from these would be the lowest, which would be 15. So we'll use 15, right, as part of that. Well, then what if your covered period, right, is 10? So this is the 8 weeks period post-funding of PPP, or the 8 weeks of the alternative payroll covered period you selected, okay? If you do that, then basically the answer, the reduction quotient, is 0.666, right? It's 10 divided by 15. So essentially the numbers you're getting from on this worksheet we have here, the table, here and here you have 8 and 2. And by the way, the one thing about this is they're not including owners in headcount, just an FYI. So if you have 8 and 2 here, that's where the numbers come from, and you have 10. So again, the FTE reduction here is basically at 0.6666, which is, essentially the loan, and I'll do it, the loan at the end, but you're essentially, your loan forgiveness will be reduced by 66%. So it's a huge hit if you don't hire these people. Again, the FTE portion is related to people hired, people working, number of basically hours that you're employing people during the time. And then if we kind of go to the actual safe harbor here, hold on one second. So then the thing is though, if you had, so let's go back to like this, right? If you had 15 people on your staff, and then you ended up rehiring 15 by June 30th, right? Or excuse me, sorry. If you had 15 as of February 15, 2020, you went down to 10 during the covered period or during the COVID period. And then by June 30th, you rehire back up to 15, then your loan will not be reduced by 2/3 or by 66%, right? It will basically say, I hit the safe harbor, I got my full employment back by June 30th. So it's a very key kind of situation here that kind of comes along the way. So very important to make sure that you're ahead of the curve on that aspect. And I'll kind of, loop back around it towards the end of this on that. So that's the FTE reduction. And I'll get Connie, you said, what if I terminated some employees but hired others during this 8-week period? It does not matter who you hire. Like, this aspect is pure headcount. They're not going to say, oh, you had John Smith here. You don't have John Smith now. You have Jackie Smith. It doesn't matter. It's pure headcount, right? They understand that people are going to quit, people are going to leave, you're going to fire people for cause. If you're hiring people back, it's the same thing. And so the exact person does not matter. All right, so that's the FTE headcount. The salary hourly wage reduction. This is the other aspect. So again, the first aspect of the FTE is pure, like, hours worked, headcount that you have employed. Whereas the wage reduction is around how much you paying people. Literally, what this factors in is if you have decreased anybody's pay by essentially over 25% from what they were paid Q1 of 2020. So between January 1st and March 31st, what they were paid at that point, if you reduce it by 25% or more, then you need to do an analysis by each person. So if you have 50 employees and you reduce all 50 of them, this is going to be a huge lift because you have to analyze everybody and calculate a total that's applied to every one of those employees. Whereas the FTE headcount, it's much easier because you're like 1.5, you total it up and you can kind of easily kind of calculate that. This is a big process if you have a lot of people. If you have 3 people, if you have 10 people and you didn't reduce anything, then this is kind of irrelevant to you. You're going to have to fill out the reduction column in table 1 for those people that were more than 25%. So if you had 50 employees, you only reduce 10 employees by more than 25%, then you just need to analyze those 10 employees. You don't need to do everybody. You can just go through, we're good here. Kind of goes along the way. Again, this only applies to employees under 100K. If they made 100K or more last year and they were in table 2, they don't care if you reduce them by 50%. Because again, I'm assuming they look at it like, well, they're highly paid people. They can take a hit in reduction and still be able to pay bills and still move on with their life and their family. And as I said, this needs to be assessed for all employees. And then the reduction is the sum of all reduction calculated. So I'm going to go through an example there. Let's get to the safe harbor first as well. So again, the safe harbor here, the dates are similar to the FTE safe harbor. So whatever their hourly or salary wage was as of February 15th of this year, if you reduced it by more than 25% between February 15th to April 26th of this year, and then you got them back to where they were as of February 15th or higher by June 30th, you hit the safe harbor and you don't have anything reduced. So, which is great, right? So it's exactly the same process or thought process as the FTE, right? You had it. Where were you at as of February 15th? What happened between February 15th and April 26th in those individual items? And then were you able to get them back to full as of and whole as of February 15th? If so, then you hit the safe harbor. You can check the box, and you don't need to worry about all this other analysis because you can just check the box that I hit the safe harbor, and you're not getting reduced for those items. Let's go to an example here because it's kind of confusing a bit. Ben, is safe harbor for salary hourly wage only applied to the wage for hourly employees? Basically, the safe harbor in itself is for wages is based upon their actual hourly wage. So $25 an hour, did you decrease it by more than 25% to $20 or $15 an hour, right? The reason that they don't care on that side by hours is they look at hours on the FTE side, right? The FTE side looks at number of hours worked, whereas the salary hourly wage looks at amount paid. So if we kind of go through this process, and these schedules that I created here, walking through are basically a mirror of what is in the application process. So if I go ahead and zoom in here a little bit. So if we go here, let's start here. Point A, so number one, this is determine if the pay was reduced by more than 25%. So let's do an example here. Line A, or 4A, the average annual salary or hourly wage during the cover period. Let's just focus on salary versus hourly wage, not to get confused. So we have $50,000 in the cover period. They were making, in Q1 here, they were making $80,000. So they got reduced $30,000 of annual salary. So that's a 62.5% difference, basically there. So essentially I have a calculation that says, oh, that's false. They're below the 75%. So we need to go to step 2, right? If all of a sudden this was like, hey, they got reduced to 70,000, right? You're above 75%, so you're fine. So you don't have to calculate or worry about a reduction because they were 75% or higher of their original wage. All right, step 2 is determine if the actual safe harbor is hit. So number 1, it says, what is the salary as of February 15th? I'll say 80 grand. The average salary between February 15th and April 26th, so the period that you decreased their payroll because of COVID, right, went down to 50 grand. Then they say, okay, well, where did you get their salary back up to as of June 30th? Let's say 75 grand. Well, it's still below the original, so you're literally, the safe harbor isn't hit. If you get it back up to $80,000, you hit it, right? Or even if you go 90, boom, and then the safe harbor is hit for that specific employee, right? So, but let's say that you're below it, so the safe harbor isn't hit. So now we need to go to step 3. And let's go to step 3 and one kind of point here. Step 3, basically then what you do is you take the original wage, multiply it by 75%. Okay, so 60 grand is basically what the 75% floor would have been. 60,000 minus the 50,000 is a $10,000 difference. So that's a difference. So then basically what you need to do about that difference, you need to basically figure out what that difference is over an 8-week period. So basically you divide it by 52, which gets you a weekly number, and times it by 8. So for this employee, you need to basically reduce your loan forgiveness by 1538.46. So again, you need to analyze this for every employee that you reduced by 75% or more, and the employee for all employees that you didn't hit the safe harbor as of June 30th. So then if you kind of look over here on the worksheet, you'll see there's that column here of reduction. And again, you only need to focus on employees that are in table 1, not in table 2 or the owners. A couple of notes is this. Number 1 is that we don't know what's going to happen when you go ahead as the number 1. Let's say you got the loan on April 1st. Well, your 8-week cover period ends end of May, right? Well, they're still saying that you have to have it back by June 30th. That's after your cover period. So I would still say as of June 30th, you still have time to hire people back and everything and hit that safe harbor, even though it's after the 8-week period. Number 2, well, what if I just hire people right around June 30th and get them back to their normal wage, so I hit the safe harbor, then just fire them afterwards in July or reduce their wage in July? Why can't I do that? That's a great question, great thought process. I have no idea. Like, again, I guarantee there'll be guidance on that. It may be like you need to keep them at that point for 30 days or whatever. I don't know. Like that's something that we're completely unclear about, but it's clearly kind of going through a lot of people's minds. So that's that process there. Kind of confusing, as you can see. And then So that's that. So basically urgent to-dos, and I'm gonna kind of walk through the application process, but I want to summarize here because now we have some specific guidance on what can reduce the loan. This could greatly impact if you're expecting to get this all forgiven. So number one, again, if you get a $100,000 loan, you need to spend $100,000 on payroll related and non-payroll related items, right? Rent, utilities, in order to get that money forgiven. You need to spend the money or incur the money and spend soon after. That needs to be done. So you can't just expect it to be forgiven. Well, I think we knew a lot of that. Number two, if you're inflating the owner's wages versus 2019 to get that number up, well, you may not be able to do that now because of this new guidance of 2019 max of eight weeks equivalency of the pay as the max including owner. So you need to basically look at that, right? The next thing is, well, shit, did I reduce headcount at all based upon these specific time frames? If so, then we need to figure out what makes sense. Do I want to rehire somebody by June 30th just to have it and fulfill the safe harbor to minimize the difference, or do I not? And what is the difference there? And then number four, have I reduced wages and what impact is that? And do I really want to increase wages back up just to get the loan forgiven? So again, these three things are huge. And then the last thing I would say, again, the amount of loan forgiveness is 75%, and 75% of the loan forgiveness needs to be payroll related. So that's the big things to figure out, right? Because if you're expecting, like, you have a $150,000 loan and you're expecting to get it all forgiven, now all of a sudden you do these calculations, you're like, I'm only gonna get 80 grand forgiven. Well, then you have a $70,000 loan that needs to be paid over the next 24 months. Again, it's at 1%, so it's very cheap, but you have to factor in all this. And additionally, the last thing is, does it make sense to rehire people, or does it make sense, is it ethical and moral to do a lot of this stuff, right? There's a lot of things that kind of go into play here to factor into this. I see some comments about bonuses or hiring people that are like hiring your mom or hiring your children or things like, at the end of the day, you need to be reasonable, right? We don't want to commit fraud. We need to be moral and ethical as part of this. And then hopefully we can get the maximum loan forgiveness that exists. But if you don't, then it's a 1% loan and you got the money. So now you have to worry about paying it back. So let's go into a kind of a walkthrough of a tracker. So what we've done at Accountfully, we've created for our clients, we've created kind of a tracker process as part of this. So just kind of walking through this. Number one, we have this kind of control sheet that basically allows us to calculate payroll related expenses, rent, everything. We can customize this to each of our clients. It's a good thing to do because you can see this really helps understand when payrolls will hit, when rent will hit, and this can help you analyze, do I need to adjust my alternative payroll covered period? This forgiveness amount calculation here is actually the actual calculation that is on the main page of the SBA application. So this is kind of how it rolls. Let's go through this. So number one is payroll costs. So this comes from that schedule, PPP Schedule A, line 10. So this comes from this other tab that you're calculating on. There's 102,985, right? So this includes all of this aspect of the cash compensation, FTE, salary, wages, reduction, etc. So that's that, right? Business mortgage payments, business rent, business utility, right? So you have all of these. Then what you do on line 5 is you actually then take that salary / hourly wage reduction number that was calculated and you reduce it, right? So essentially what this is all of these total up less the reduction. So the key thing number one is to realize that your loan forgiveness is reduced on a dollar basis, right? By the wage and salary reduction aspect, okay? Then once it's reduced, they then multiply it by the FTE reduction quotient. So this is taking this, multiplying it by 2/3, and you get $76,000. So then the calculation is these three items, right? The total that we just calculated, the actual total of the loan that you received, and then this is basically the 75% payroll requirement, where you basically take the total payroll cost divided by 0.75, you get this number. Then what the SBA is going to do is take the lower of these numbers. That's what you're going to get forgiven. So for this specific situation, they got a $125,000 loan. They spent a total of $116,000, but they're only going to get $76,000 forgiven, mainly because of this reduction quotient. So I want to emphasize here, the amount you're paying your owners or the owners are paying themselves could dramatically affect this, right? because if you paid yourself as an owner 50,000 last year, and now you're going to max out this, this 15K for the 8-week period, well, you're going to have to go down to that $50,000 equivalent by 8 weeks. That's going to affect it, right? Especially if you have multiple owners, it could affect it big time. And then you could possibly then pay your employees a bit more if you want to, if it's reasonable and makes sense again, right? But that's number one. Number two is the first thing we're doing is taking this reduction. So what it's doing is, like, if we look at this example here of salary hourly wage reduction, it's just showing that we reduced this person's wages annualized by $30,000, right? We reduced it by $30,000, yet we only have to deduct $1,538 from the loan forgiveness number. So you can reduce somebody's wage or really big, and its 8-week equivalent is $1,538 that impacts this forgiveness. Okay, that's a lot of money, but really is it in comparison to this, right? This FTE reduction quotient is going to affect this big time, because you're then taking it from essentially 114,000 down to 76, because you're taking this 2/3. And the reason that is because this specific example, they had 15 people in the in one of the two reference periods, okay? And now they only had 10. So they're 2/3 FTE versus the reference period, so that's where that comes from. So when you're looking at this, you're like, oh my gosh, I'm literally 114 grand, or let's say we wanted to get, you spent $116,485, and you were hoping to get all those forgiven. Well, I'm going to have one for a reduction of wage for this one person because I took them from 80 to 50,000, of $1,500. Okay. Well, if I get them back to $80,000 as of June 30th, this goes away. So is that already in your plan? Do you like this employee? Is he a long-term person? Does that sound great? Right. Number two, this 0.666. So now I'm losing, I'm getting 14K plus, 15K plus this, nearly $40,000 that I'm going to need to pay back versus be forgiven, because I only have 10 employees now versus 15. Okay. Well, is there a way that I can get back up to 15 by June 30th because my business is going back up? It's a decision you have to make as a business owner, but you need to literally analyze this now and understand all the circumstances that exist in order to maximize this, because there could be something that if you don't be focused on this and understand all the nuances, that you could get out of $40,000 of basically forgiven money free that you have to pay back at 1% over the next 2 years. So highly recommend is if you've reduced headcount, if you're including owners' wages that don't mirror what they paid in 2019, and if you reduce wages for hourly workers and salary workers, get focused on literally trying to check that out and analyze it to see if it makes sense to go back and recalculate the information, analyze it, do it yourself, get an accountant involved with it. So that's basically, if we go back to the actual slide deck, is these are the main things. If either of these happen, reduce headcount, reduce wages, if you're using owner compensation and it doesn't mirror 2019, I would highly recommend doing an analysis, kind of like I have set up. And if you're not close to the maximum loan forgiveness, does it make sense to hire people, pay employees more? Or does it just make sense because where your business is to say, hey, look, this is a very cheap loan and I'm going to move forward with just paying it back because it makes sense, and I'm not going to do something stupid right now and hire somebody that I don't need just to get it forgiven. All right, that's that. Let me go to the questions here. I'll pop up here. All right. So if an employee makes $55K a year, can they receive a bonus or increased pay up to $100K to $15,000? That's by Anonymous. Anything with bonus, I would recommend stating that you need to be reasonable. Because if they come in, because you're going to give individual employee numbers and amounts to the bank or SBA, there could be a way that they track an audit and literally say, oh, you went ahead and paid this person more. This isn't reasonable. You're just paying them more. Now you're not going to pay them 2 weeks later or a month later. Like, don't do anything crazy, right? Be conservative in this aspect. That's the accountant in me saying that. So in short, I don't know the answer to that. It's be case by case. Make sure it makes sense. Make sure it's in the normal course of business. Let's go. Keep going back. If a self-employed person didn't take draws or very high draws in 2019, is the forgiveness limited 2019 wages equal to draws, or is it equal to Schedule C net income for 2019? Schedule C net income is kind of one that I'm not even going to touch on if you're a Schedule C person, because it's kind of the original guidance is saying that you're going to get net income is forgiven versus the draws that you took. So I'm not sure of the answer. I'm going to try to figure that out more as we go back. Bonuses aren't excluded; they are included, but you need again, they need to be reasonable. When do we need to apply for the loan forgiveness? Does the lender tell you that? That's still to be determined, right? So the biggest thing here is, let's say that you got the loan on April 1st, it's ending soon at the end of May, the 56 days are. Well, per the guidance, you have until June 30th to hit the safe harbors. So they have to at least wait till June 30th to be able for you to apply. I'm going to guess, and they're probably going to say 60 days after the cover period is done or something to forgive. Like, again, I don't know about that. But get your ducks in a row and be analyzing. And in the meantime, get your tracker in place and start, getting your payroll report saved, getting your rent check saved, things like that, just to be ahead of the game. And that'll again be bank. Can we get linked to the spreadsheet? I can send. I don't know. I got to figure out what I'm going to send out after this. Purview, we'll see. I've heard they're considering extending the safe harbor deadline past June 30th. That's from Ron. I have no idea because this just came out. I haven't heard anything else on that aspect. June 30th has always been a key date as part of this. They could not. James, does the interest continue to accrue on the original loan amount until a forgiveness amount is established or after? I believe that the interest accrued as of the loan date. So the date you receive funding, I believe that the 1% starts to accrue. And then if you get it forgiven, I think it's kind of goes into the forgiveness portion, because it is a 24-month loan. So the 24-month loan, so the 24-month is going to be as of the funding day. Now, it's a 6-month deferral of payments, but interest still accrues during that point. Will we need backup copies of payroll reports, utility bills, etc. show proof? Yes, there is on page like 10 or 11 of the application form. It says what is required and what is basically you need to do. Current lease agreements, copies of invoices, payroll reports, etc. It also says documents you must maintain but not required to submit. And they're saying that you need to maintain the documentation for 6 years because you get audited, so the statute of limitation maybe 6 years. So yes, you need to kind of maintain all that. Now, what the bank is actually going to request and review, who knows? So just gather all the information of that you're using. Will the recording be available, Eric? Yes, we will be sending it out very soon afterwards. If a founder's guaranteed wages were $75K in 2019, but they received a raise in $100K to 2020, they should only receive the equivalent weekly pay of $75K. That is correct, Anonymous. You have to base it upon $75K in 2019. David Burnett, the reduction quotient is applied to like the total expenses at the end of it. So you add up everything, you reduce the salary, hourly wages, and then you multiply it by the reduction quotient. And that follows the actual forgiveness form that they have. Transportation costs, that's one that I can't define, Eric. That's really loose right now. I don't exactly know what that means. Utility costs are, gas, electric, water, internet, phone, etc. You can do rent on, office buildings that your employees are. You can also do rent like where your personal property or your inventory is located. Transportation costs, I don't have clarity on that. Does it make sense to start a 401k match program now? It could. Right? I don't think there's many guidance that it has to be in place since beforehand on that aspect. Alternative covered payroll only for biweekly or more frequent payroll, Hiroko. That's going to be depending upon when you received it, just how the dates fall, and what your aspect. It can be for monthly payroll, it can be for whatever. Like just analyze and see, are you hitting 4 pay periods, or are you hitting 8 pay periods? You can have the alternative covered period for any of your payroll schedule. You store inventory at your home. If you're not paying for it, then you're not going to be able to get that forgiven. And if you're going to pay for it, you can't just start now. It would need to be paid for before February 15th of this year. Is partner salary back pay forgivable if payroll was stopped or missed prior to receiving loan funding? You're going to have to, again, it has to match the 2019 amount, right? A max is basically the biggest thing. It can be forgivable even if you did skip prior to them receiving loan funding. Again, they're going to look at it at the 8-week cash compensation portion. If I had to terminate an employee for cause and one left on their own, in order to receive full forgiveness, do I need to rehire both roles, or could I increase my other employees' pay because the 2 employees left? Well, if an employee left for cause and one left on their own, those are those FTE exceptions, right? As long as it happened during the 8-week covered period. If you have to do that, you don't need to rehire somebody. So again, you're terminated for cause, and then one left on their own, they voluntarily resigned. As long as it's during that 8-week covered period, you don't need to rehire, and you still get coverage for those FTE. Does warehouse rent costs? Yes, warehouse rent costs is included. Owner salaries is included, but it can only be the max of your 2019 equivalent payroll. For owners that only receive distribution from an S corp and no wages, what options do we have for paying those owners with the PPP money? I'm kind of taking the guidance that the wages that should be included are ones that are basically assessed as against self-employment taxes. So distributions in an S corp aren't. Again, I've seen people get the PPP funding because their bank allowed that. I don't know the answer to that. There's just some lack of clarity, but I'm taking the conservative route of wages basically are, but whatever bank you got it with, I would talk to the actual bank to ask, if I did this, what makes sense? And they'll probably be like, we don't have the guidance yet, or we don't know yet. I'm trying to go through here. Got 8 more minutes. I'll try to stand as long as I can to answer all these. I think we still have people on the line. 79, cool. If you furloughed or laid off employees plus rehired new employees, do the wages paid to new employees count for salary wage safe harbor? No. So the employees, the salary wage safe harbor is based upon individual employees, right? So if you paid somebody $25 an hour, then you went down to 15, you need to get them back, that person up to $25 an hour. So it's at the FTE is different, right? FTE is a sum of your total employees. It's a, you know, you can hire new employees to count against that. The salary hourly wage reduction is for people you have employed, and you need to get that person back up to where they were at. If an owner was making 100K or higher in 2019, does it make any difference for forgiveness? They can then get paid basically the 100K max, right? Which is $15,385. As long as they get paid during that 8-week cover period, that can be included. Can utilities for work from home employees be counted as something like internet access or similar? It may be able to if you're a Schedule C, but it really depends if you included that on the application up front. I would work with your bank on that. What is the definition of exception utilities? Utilities can be very vague, right? That's why I'm saying exception. Some, security systems, are they included at the office? I don't know. I think, I would recommend including as much that makes sense, and then basically go ahead and add it in. And then when you go for forgiveness, work with the bank, we'll see what it says. 1099 people, if I have 1099ers that I was planning on bringing into W-2 later in the year, would it make sense to bring the W-2 now to include them in the forgivable people loan? Yeah, definitely. That'll get your headcount up. That'll allow you to hit the FTE number, and that'll give you more payroll right now, right? If they're a 1099 and they got the PPP themselves, it may not be good for them though. How many months of rent are covered? Just the 8-week period or so, 2 months, or any rent payments made in that period? We've had our rent deferred since March. I'm hoping to pay March or June with PPP money. It's paid and incurred. So I would say 8 weeks of rent. I wouldn't double dip or triple dip. You can pay them all, but I would just include the portion that's like the 8 weeks, because otherwise, like, this could get really hairy. What if you had several temp 1099 employees for seasonality? Do include 1099 people are not included in this at all. They should not have been included in the loan calculation that you received up front. Many people actually, many banks included them. So those people are could get screwed on this. So don't worry about, just exclude 1099s unless you're going to bring them on as a W-2. Slides available for us to print. What about the Excel worksheet, Michelle? I'm going to kind of figure out what I want to do with that. If we know we will need to furlough / lay off people after PPP, is there a time frame that we need to wait so it's not affect PPP forgiveness? Great question. I don't know the answer. And clearly this was in place to keep people employed and businesses running for 8 weeks. So if your business is still going down and you kept people in place for 8 weeks, you spent the money, well, now you need to make business decisions. So I'm not expecting them to be too crazy where you need to keep it for 6 months, because literally you need to make a decision to keep your business open. And originally it's been 8 weeks or through June 30th. I would probably, for now, don't do anything through the cover period, wait till after. but I'd imagine there probably will be more guidance specifically on how long you need to keep people in place, how long you need to keep their wages up. Tips factoring the hourly wage reduction. Jolyn, I'm not positive on that one. If the reference period included owners, how can the covered period exclude them? It's, Katie, basically, they both should be the same, right? So if the reference period included owners, just get rid of the owners at that time for that sake, for the comparison sake. It's a bit confusing. So you shouldn't have the owners in either of the FTE reference periods. And all the stuff I've ever done with my clients, I've included the owners, but for this sake, it looks like the owner's FTE is completely out of the sake. They don't care about owners for sake of the FTE. What do we have to show to prove that an employee did not want to work during COVID? Does a text message saying that they don't feel safe work? And I would get as much documentation as possible. I'd send an email, say, please confirm that you do not want to come to the office to work during these timeframes due to COVID, and get them documented, get their email, get their number, get their signature, get their electronic signature. I'd do as much as possible just to cover your ass. Filing dates, such timeline forgiveness application. Again, I don't know the timeline of that. Owners aren't counted in headcount, even if it's paid in W-2. Again, that was a weird thing for me. I think at the end of the day, if just don't, the reference period headcount and the new headcount, just don't include owners. Because I don't think they're going to want owners included. So just it'll still be apples to apples as long as you get rid of them for the sake of it. Can you include owners as FTE in a C Corp, even if they're also employees? Again, C Corp's even different, right? Because like an owner, you could have 2%, stock options. So it's a bit weird on it. Again, I would just use an apples to apples comparison in it. Can S Corp owners still include their health insurance and retirement contributions for cover period? I've seen nothing that says. I've seen a lot of forums that say you can include it, but I don't see anything from the SBA that said if you're an owner of the business, you can include your health insurance or retirement. I haven't seen any of that. So until I hear otherwise, I'm including all that. Owner's compensation, if they're paid as W-2, they still need to be separated into that owner's table portion because they're an owner of the business. Because again, everybody over 20%, it's probably 20% is probably the number for C Corp too and everything. Because on the application, if you remember the loan application, any owner over 20% had to sign on the paperwork. Use original PPP application that was used. Actually, that's a great question. On this application, you do need to put the original FTE number that you put on the application, but any of the reference periods that are noted do not say the number at the start of the application. So I think the number on the original application does not matter for the comparison purposes. It matters if you use the February through June of 2019, if you use the January, February of 2020 to compare against. And that number you use is purely different. What if you hired a new employee midway through the cover period? Should they still be included? Brittany, yes, they should be included. But if you hired them the last 4 weeks and they're one and they're new, basically you have to do average weekly headcount, right? So the first 4 weeks, your average headcount could be 4. The last 4 weeks, it can be 5. So your average headcount, the entire aspect is 4.5, right? So you need to figure out how many hours they work. So it's 8 weeks times 40 hours a week is 320 hours. So if they only time period. Are all payroll taxes included in payroll costs, only local state taxes? Only local state taxes. The FICA taxes, Social Security, Medicare, and federal unemployment paid by the employer is not included. I'm getting through some more. It's 3 o'clock. I can stay on and answer some of these other questions if anybody wants to stay on. I have a business owner wanting to hire his wife. What do you think, Eric? I would not if it's not ethical. Is he doing it because she's actually doing something for the company? Or is he doing it to get loan forgiveness? Also, what is she doing? If she's going to come in and be an admin, he better not be paying her $15,000 during that 8-week period. Like, again, it needs to be reasonable, right? We need to use it like our brains. We need to be moral and ethical here along the way. An employee's salary is mostly commission-based. If client sales have not returned and the employee's salary remains at more than 75% reduction, will that portion of the PPP not forgiven even though there's nothing the business can do? That's from Darren. That's a great aspect or a great question on commission. It's a variable compensation. It's hard to say. I would probably recommend paying them during the 8-week period as a draw, or a proactive commission or a pre-commission, whatever you want to say, and then apply commissions later to get it forgiven. Right. The goal is to keep them hired, keep them paid similar, so they can then support their family, their own mortgage, things like that. All right, Kyle, for calculating FTEs, are we doing that week by week, then doing the average for each week? Also, if an employee normally works 40 hours, but one week they work 38, for the week they work 38, are you doing the simplified method or does it count? I would be reasonable in this. If they're typically a 40-hour week person and they work 38 hours, like it's 2 hours, do you pay them a salary? If it's close to 40 hours constantly, I'd probably just include them as a 40-hour one FTE. If they're below it, if they're 20 hours and then 40 and then 10 and then 40 and that, then I would do 0.5. And then just do an average per all 8 weeks. So if you total up all the 8 weeks they worked 56 hours divided by 8, that's 7. So it's 7 divided by 40. Or you can just use a simplified method for the 0.5. If my PPP funded April 20th, my next payroll hits on April 24th, but covers period 13th to the 24th, can I use the payroll even if the 1 week? Yes, Andrew, you can use that payroll on April 24th. You can just solely look at it from a cash basis. You don't need to worry about the payroll dates. The sake they're not, I would probably exclude the 20% owners. But again, the comparison purposes for the reference period, just exclude them as well. So if you have the same number of owners, it doesn't matter because they're both excluded. So then just use everything else. If your pay period is bi-monthly, could you somehow then get 4 payrolls into that 56 days potentially based on payroll day and then CHA? Yes, you can. So again, you can figure it out, and if you can't, then just move the alternative payroll date to cover 4 periods. So the goal with that is to get the 4 periods or those 2 months that paid for. If you have some excess funds by the end of the 56-day period, could I bonus my employees with that excess and have that be forgiven? That's from Rachel. Rachel, if it seems to be a normal course of business, not fraudulent, not excessive, I don't see why you couldn't be doing that. Can we use for back-end rent if we were behind? Again, I wouldn't do that. I would essentially focus on only the rent for that 8 weeks or those 2 months. I thought this was just for sole props and partnerships, but did not include S-corps. I don't know what that means. Well, what if wages were reduced but per employee's request? Example, employee requested to go from full-time to part-time due to childcare needs from COVID. There's 2 things here. There's number 1 is the FTE headcount. Well, if they voluntarily requested to go down, they're still part of that FTE headcount, right? You're not going to get nicked for that. The other aspect is basically did their wage decrease by 25% or 75%? It didn't. Basically, if they were paid a salary of 50 grand because they're working 40 hours, now they're working 20 hours, so they're getting paid 25 grand. That's still a similar wage, right? It's just the hours work are different. So I would consider that not a reduction in wages. An employee willingly chose to leave the company during our 56-day cover period. Are we able to get forgiveness? How long? I don't need to answer that. If an employee was hired during the cover period, can you use a signing bonus to increase an employee's forgivable amount? I guess technically you could. Especially if it's part of normal course of business, if you had to get that person, in, if you had to pay them that, et cetera, James. Is the cover period the day that the payroll money leaves your bank account or the date that it's paid to employees? That's for anonymous. It actually can be either, which is interesting, right? It says specifically can be either. Given the 401c3 owner-employee definition, are S-corp shareholder employees considered owner employees? Yes, I would. If you're an S-corp shareholder employee, I wouldn't consider you to be an owner, so you'd have to go in that third table section. Kyle, if they work 60 hours, it does not be 1.5 FTE. It's just 1. If you had a part-time person, but again, the reference period, you need to do the same thing. So if somebody worked 10 in the reference period, you can't use the other calculation to then base the area on it. Thanks, Conrad. Are there any limitation if you use PPP just as a loan? I don't believe there's any limitation on it if you used it as a loan, especially if it's under $2 million. Then you check the box for good faith certification saying that you needed it because of economic uncertainty. So if you're just using it as a loan, it's fine. You just need to pay it back. The biggest thing here is people fraudulently getting it up front and then fraudulently doing expenses that shouldn't be forgiven as part of the loan. Christina, no funds for contractor 1099. Well, I guess you could use them for contractors or 1099, but you can't use that money for forgiveness. What if owners were not on payrolling provisions for shareholders to show the distribution? All info we have received is no, but wasn't sure if guidance had changed. There's no specific guidance in that, Marianne. I haven't seen it. Again, if the bank gave you money based upon distributions that you got last year, the 12-month period, ask them, hey, I'm getting distributions now, they're on a payroll. Does that make sense? I'm taking the position of, is the payroll that's getting paid, is self-employment taxes getting levied on it? Well, S corp distributions aren't, so I wouldn't include those personally. Highly compensated individuals, can health insurance retirement match be forgiven above the 100K threshold? Yes, 100K is just purely your wages. You can go, health insurance retirement can be higher. That can go above 100K for sake of the forgiveness. Eric, you are welcome. Is profit sharing for the prior year forgivable? That's a great question. I have no idea. Ben, I started using a new payroll agency, Gusta, starting in April. I pay payroll taxes for Q1 in April, and I pay hourly wages by check from there. Can you use January to June as the reference period, even though the payroll info is partially capital? Ben, let's talk afterwards on that. That's confusing. I need to think about that. Can business SaaS licenses be included in utilities? Things like Salesforce's license? No. That's nothing to do with keeping your lights on and keeping your doors open. Again, like water, traditional water, electric, internet, things, that type of stuff. What if someone was fired for cause between the reference period and the start of the cover period? This is actually interesting because let's kind of go through here. So let's say you got the loan May 1st. You basically had, that's the start of the covered period. And you have the February 15th or January, February is the dates of the headcount, right? Well, what if in between you changed or fired somebody? That doesn't matter. You have to use the reference period. So you may get kind of screwed because of the timing and you may need to hire somebody back, or you may not be able to get it all forgiven. We didn't get the full applied for amount because we do a cash draw. We therefore use 30% of partner income. How will this affect our forgiveness and disbursement to partners? That's going to have to be like an individual calculation. I'm not positive. If owners gave raise in 2020 compared to 2019, do we need to reduce back to 2019 in order to get any forgiveness with just cap? It's just going to cap. You don't need to reduce it. It'll just cap at 2019. So if you can pay him 100 grand, but it's still just going to be that $15,000 max or whatever you did in 2019. Isn't health and retirement limited for an owner who's self-employed, Eric? I haven't seen anything specific on it. I know I've seen that in forums and things, but I don't know. That's that. Let me see if there's any other questions here. If we had funds available, i.e. a bunch of money to put away, should we not be participating in the PPP altogether? Conrad, that depends on like how moral you are and how much you want to support small business or other small businesses. Again, economic uncertainty is interesting, right? Because you could be still doing great right now because all of your clients receive PPP, so they're like, keep chugging along. Well, what's going to happen in July, August when PPP's funds are gone for everybody? Is then your business is going to decrease and drown, right? Is in Q3, is in Q4, is it going to hit? Are you a seasonal employer? So it's going to be hard to assess that right now. So all I would tell anybody is if you're able to get your small business, you've hit all the boxes, you are uncertain about the economy, the economic impact of your business long term, take care of your business. You put your time, energy, sweat into it, your stress into it. Like, give yourself a minute, set it up for success, set your employees up for success. Jeff. Seagull, our shareholders are employed, but what terms? Yep, exactly, Conrad. And I think a lot of people are expecting that in Q3, Q4 after all the PPP funds go away, and who knows what's going to happen. So I think that's it from my perspective. Hopefully I answered all the questions. This is recorded, it'll be shared via email for your kind of all the ways that we did it before. I hope you got a lot of value out of this. Can't say enough, please be proactive in terms of analyzing, calculating your current forgiveness portion because it could be a material amount of money. But Accountfully is here to help out if you want us to for our clients who've already been engaged in those conversations with you. But this is a whole new aspect of this, of analyzing it. And then when the actual application form gets submitted, it's very confusing. And again, I would make sure that there's specific things that you're, people that you're leveraging, or there's multiple eyes on that when you're submitting it. I hope everybody has a great day. Best wishes on the PPP. Have a great Memorial Day weekend.